The second day of trade talks between the US and China are underway in London as negotiators look to secure a breakthrough over export controls for rare earths and other goods. The talks followed a rare phone call between Donald Trump and Xi Jinping last week as the trade war between the two largest economies continued to rattle global markets. Taimur Baig is the chief economist at DBS Bank in Singapore, and he joins me live. Taimur, really good to have you with us on the program again. Now, there are positive signals today from the American officials in particular, who said that the US was likely to agree to lift export controls on some semiconductors, but in return for China speeding up the delivery of rare earths. Is this likely to happen, and will China see it in the same way as the US?
Oh, absolutely not. I think the asymmetry in the way this war is being looked at from the halls of Beijing versus the halls of Washington, D.C. are fundamentally different. I think the U.S. thinks it has a lot of leverage. The Chinese think they have a lot of leverage. They think that they have the leverage on the rare earth side, both on the upstream and downstream aspects, and that there are a lot of auto manufacturers and electronics manufacturers in the U.S. who are hugely dependent on that, and they feel that with that they can squeeze the Americans. The Americans, however, have a much broader sense of the conflict, which is that the access to the U.S. market, access for China on sensitive technologies, including AI-related chips, for which China is hugely beholden to the U.S. know-how. So I think that the midpoint would be some degree of détente, but this is certainly not going to lead to a full-scale relaxation of restrictions that the U.S. has imposed on China. It'll be a little bit here, a little bit there, and a lot of postponement, which seems to be the classic modus operandi of the Trump administration. There'll be a lot of postponement around this stuff.
Yes, so in that case, and who, as far as these talks are concerned and what they're trying to achieve, who's really got the upper hand? Because, we have seen Donald Trump move in so many different directions when it comes to the tariffs. Xi Jinping, on the other hand, has struck a calmer figure as far as public comments are concerned.
I don't think on the upstream side, the raw rare earth material, China has that much leverage any longer. There are mines in Malaysia, which, if my understanding is correct, run by Australian companies, which produce rare earth material and supply quite a bit to the U.S. as well. Downstream, yes, magnets in particular, whether it is U.S. military or U.S. Commercial private sector companies rely hugely on China's supply. So I think China has short-term leverage on this issue, and I think they're keen to exploit that as much as they can. But this is not something that is only specific to China. In the long term, there are many parts in the world that can mine rare earth material, and there can be downstreaming applications developed elsewhere as well. So it's a leverage that China has for the short term.
Yes, and how long do you think that short term is? I mean, because then the US does have that agreement with Ukraine for mining, critical minerals in that aspect. But we know that it takes quite a long time to first establish the mines and then to process what's coming from the ground as well.
No, absolutely. I think if it were a war-like situation, I think things can be expedited. But beyond that, we're talking about half a decade, if not longer, to get these things on stream. So for the time being, let's put it this way, if Chinese perspective is just to wait out Trump, they have just about enough time, not a problem. But mind you, I don't think the trade friction between the U.S. and China now is only in the realms of Donald Trump. It transcends Trump. Look, during the 4 years of Biden, none of the Trump trade-related restrictions were really withdrawn in this as a useful leverage tool against Donald Trump. But for the medium term, they better be careful of not overplaying their hand on this issue. They don't want to make the entire world insecure about both the downstream and the upstream aspects of rare earth vis-a-vis China.
Yes, and is it too soon to say, Taimur, if as far as the outcome of these talks are concerned, that it might lead to something bigger in the sense of that tit-for-tat tariff war that both are having, but it's on pause at the moment? Do you think something like this will be resolved before that pause expires?
So it's an interesting dynamic right now. You have U.S. commercial sector, whether it is tech or auto, they're all lobbying for a relaxation of some of the tough measures that the U.S. has imposed on China because they feel that their bottom line would be hurt tremendously if these high tariffs remain in place, which would then push up their input prices substantially. But then you have the political spectrum, whether it's the Democrats or the Republicans in Washington, D.C. There isn't much daylight between those two parties in terms of wanting to beat up on China as much as possible. So can the private sector lobbying soften Donald Trump's stance, or will the political imperative to look at China as a rival that needs to be stymied at any cost remains the overriding concern of the day? My fear is that the U.S. commercial sector has woken up a bit late in the day, and they will only have limited amount of traction on steel, on automotive. I don't see any relaxation of sanctions or tariffs. On other things like electronics and pharmaceuticals, there might be some degree of leverage or some degree of relaxation that can be entertained in the short term. Look, we're less than 30 days away from the pause of reciprocal tariffs expiring. Something needs to give. So I go back to my earlier prediction: a lot of postponement and delays, and a few deal making is the most likely outcome.
And based on what you've just said right there, how are investors feeling? Because today the markets were fairly mixed, but in general, leading up to these round of talks, how are investors sort of looking at this? Are they more or less confident?
It's a remarkable bout of complacency permeating through the global equity investor base. No question about that. Everybody basically thinks that the harsh measures that were imposed on April 2 would be postponed or delayed indefinitely. Whatever gets in place would be in specific areas, specific countries. It won't really alter the dynamic of global trade relationship in a meaningful manner. I hope that the market's complacency is well justified. I am a bit shy of joining that fray. And there are a whole bunch of other moving parts. It's not just the trade-related things that are going on right now. The U.S. is asking for things beyond trade deals. It is asking for countries to appreciate their exchange rate. It is asking countries to show commitments towards investing in the U.S. and keeping on purchasing U.S. treasuries. I don't know how many more of those things many countries in the world would be able to abide by. And if we see the global currency market, if we see the liquidity of safe assets in the world, things are not quite healthy right now. So looking at equity markets, I would ascribe a great deal of complacency on the part of investors. Looking at what's happening on currency markets, on gold, on crypto, and on fixed income markets, much deeper sense of reservation and concern.
And just finally, Taimur, behind these talks are some actual figures. And from yesterday, what really struck me was a 35% drop in Chinese exports to the U.S. year on year as of May. What does that figure tell us about the state of play when it comes to the overall China-U.S. trade?
I mean, just remarkable numbers. On one hand, China's exports to the whole world is rising by high single digit. On the other hand, their export to the U.S. is falling. So where is all these exports going from China? They're going to probably both for trade diversion through third parties, or as many fear, that some of it is going to be being not dumping is not the right word, but would be certainly being sent to other countries at a lower price. So both of those dynamics create great deal of distortion in the data, in the global trade dynamic. So we'd have to keep an eye on what's going on. Look, Vietnam is about to be saddled with 46% tariff again if they don't get a deal with the U.S. in the next few weeks. And I'm not, frankly, very hopeful. Their exports to the U.S. is up by 50% on a year-on-year basis. Yes. So there's a lot of preponement, to borrow an Indian expression, of trade going on, and we probably will not see the true impact of some of these tariffs till maybe the fourth quarter of this year or maybe even 2026.
Okay, Taimur Baig in Singapore, really appreciate your valuable insights and analysis. Thank you so much.
Thank you.